Condos in Fremont? Is now a good time to buy or sell? I'm Kevin Peterson, your local realtor here in the San Francisco Bay Area. Today, we're diving into the 2 or more bedroom condos in Fremont, California. I recently had some investors taking a look in this area and figured I'd show you some of the analysis that was completed. Let's dive in. Over the last year, sales prices have varied somewhere between $900,000 and as low as $750,000 in November. We're seeing prices continuing to go up in the short term. For the long term, sales prices as of around 2012 have nearly tripled, and the last few years during the pandemic there was changes in how people wanted to live and where they wanted to live. Overall, we're seeing the prices stable here over the last few years. In terms of inventory, we are seeing a market deceleration in homes that are being sold right now. You'll see those in red are the active inventory, and those in green are those that have sold in those months. What does that translate into? Well, the rate at which they're being sold has decelerated over the last couple of months. How is that impacting the average days on market as well as the sales to list price ratio? We're seeing days on market continuing to go up. However, we're also seeing list to sales price go up as well. So what is going to be being developed over the next few years? Fremont has a 5-year plan. What we're interested in is the yellow. We'll see that there are multiple residential developments going on over the next few years. I'll leave the link below to this map. As of right now, the active inventory looks to be around 20 condos that are on average 1,642 square feet. The average list price is around $1.135 million, which translates into around $702 per square foot. This is on average a 2-bedroom, 2-bath, around 38 days. Those that have sold in the last 45 days were slightly smaller at a lower price, and the price per square foot was about over $50 per square foot. So is this a good investment? Well, the rents for a 3-bedroom, 1.5 bath or more in this area look to be around $4,300 a month. Compare that with the average sales price, and it looks to be around $1.2 million, interest rate of 6.7% with 30% down, which calculates to $7,370 per month. So at the end of the day, cash flow wise, there would be a difference of roughly $3,000 a month. When would this make sense? Well, if you have a high income and are looking to reduce your taxes, there is something called a cost segregation study, and essentially an investment property can be appreciated over 27.5 to 39 years. But if you break it down and do the segregation study by a cost segregation specialist, they can identify personal property as well as potentially land improvements of somewhere between 30 to 45% that can be accelerated in depreciation. So for example, you buy a $1.2 million property, the accelerated tax savings over roughly 10 years is $50,000. I can make another video about this, but essentially this can offset some of your taxes in the current year and in the short term. And there you have it, folks. Months of inventory are nearing record lows right now, and we're seeing quite a bit of inventory coming online over the next 5 years with the construction of new condos. If you're looking to sell, now would be a good time, being that there's very little competition out there for you. Demand is high, and with interest rates falling, buyers are going to be coming out in droves. For our investors, the cash flow is not there right now, but the tax savings can help you over the next few years. That's it for this week's market update. I'm Kevin Peterson, your local realtor here in the San Francisco Bay Area. Thanks for joining me, and please feel free to reach out anytime with any questions. We'll see you in the next video.